You know, I talked about this breakdown at 98.5, and we did pretty well shorting the euro. And I talked about that the euro had not bottomed Monday. Here we were Monday because RSI had confirmed the recent low that we should get 3 drive to a formation, 3 drive to a bottom formation developing before a turn, and that's exactly what happened. So here we are. I talked about the 109.80, 109.50 to 40 range in the euro, which is where the euro turned from today. So if I want to be a real aggressive dollar bear, this is going to set up a flag and a continuation move to take out this low. But as always, we want to take it one step at a time, not build the narrative into, you know, some type of hype. So initially, what I'll be looking for is a correction of this correction. So in my mind, this was a correction. I'm open to the dollar taking out these lows. But for now, what we're going to look for is to correct this recent bounce, which we participated in most of the way with the euro, all the way with the pound. Now I'd be talking about talked about a 135 pound, the 09 lows being tested. We're not that far away from it. So let's just take it a step at a time and look for some type of 50% retrace of this recent decline, this recent rally in the dollar, recent decline in the euro. So basically, let's call it 95.5, 2.5, maybe 1.5 back would take us to 96.50 or so, maybe 96.20, and have to be open to the fact that this could be an A or a 1 with a 2 or a B, and then a C to the upside that perhaps takes us back to 98.5 or so. Of course, breaking down back under 96 is going to say that we're going to be heading lower, and if you really want to be a bear, you call this the beginning of a bear flag, and from par to 95.5 is 4.5. 4.5 under 96 is going to give us 92, 91.5. And I do think that's viable, but we don't want to get ahead of ourselves on the narrative. So initially, I'm just looking for a pullback here, not an outright dollar crash. Part of the reason was that I was looking for the dollar to sell off was a weakness that I thought we would get a pullback in the S&Ps, which happened from Monday. So here we were Monday, and we're starting to pull back in the S&Ps. Was this enough? Maybe. Halfway back would be more like 1860, 1890. And then I still give the market a chance to rally into late March, early April back here. So I do believe if we're going to pull back and have another run, that the dollar could have another run as well. So viewing this as a pullback from the recent low, not looking for a crash right away under 1800. So thinking the dollar S&Ps pull back, and then we have one more rally. Give me a Y if you're with me on my view of both the S&Ps and dollar, which seem to be trading hand in hand. You have a 2-day pullback here in the S&Ps. I think it could last maybe into early next week. And you have the beginnings of a pullback of the recent dollar recovery as well that I think can last into sometime next week. And we'll see if we put in a higher low. Give me a Y if you're with me. Oil has turned quite wild. I was right that oil might be vulnerable for a decline but not make new lows. That's actually exactly what's happened. And let's just look at, say, April. So here we were Monday. We've had a 2-day decline. It's starting to recover, even a little reversal day. I'm not sure if we're going to have to wash out under new lows. You have some premiums here based upon the futures. Let's look at daily nearest. Might have a little different look, which is why I thought the Canadian could bounce when we talked on Monday, which it did. And Canada is giving a lot of its gains back today with recovery in crude. May have been the inventory number. I'm not sure if this 2-day pullback, just like the 2-day pullback in S&Ps, is going to be it. Maybe we end up kind of like with a right shoulder here. which means it could be deeper, and the pullback could continue for a weak dollar and weak S&Ps. We start clearing 34, we're on our way to targets I've been talking about for a long time, 38 to 40, which is going to be very negative USD CAD. Give me a Y if you're with me on the USD CAD correlation, and the Dixie with oil, and the Dixie correlation with dollar-denominated assets, in particular the S&Ps. And then we want to, the yen is making new lows, retesting the recent lows. I think there I thought we'd hold 112, gave a sell at 113.50.60. I think that worked out. So with the yen retesting the lows, so this actually looks like a failing rally in the bonds. I'm not saying we can't blow off, but this would give credence to the fact that although the yen is testing recent lows, I believe not quite taking them out, that the bonds did not make a new high, which is what they should have done. And this could be A, B, C. And so most likely we should be looking for some type of bottom in US dollar yen, and we could still get some type of retrace to the major breakdown around 116. We'll take a look. There are beginning to be some type of divergences. Do not chase the yen shorts here. Give me a Y if you're with me. Everyone with me on the outside market correlations? Gold continues to blow. A lot of Ellioticians are calling this the recent pullback a wave 4 with a wave 5 that's underway. Could take us to 1300. Here's the June contract. We're almost at new highs, so we could spike here in the gold. This has been supportive of the Aussie. I think that we're going to complete this move in gold up around 1300, and then we're going to get a very good correction. So just this range from, call it 12 to 1260, can give you 1320. So if you were fortunate enough to be long, I liked it down here, but this is where I thought it was going to end, right around this 1140, 1150 level. We have this acceleration. If you've been fortunate enough or naive enough to ride it all the way up here, we get spikes up towards 1300, 1320. I would look to go to the door. Give me a Y if you're with me. So perhaps the Aussie has a little life left in it, especially with the dollar turning. Everyone with me on the correlations of the outside markets that I cover in each and every webinar? Okay, very well, let's get to our instruments. We always start off with Euro USD. So here we were Monday in the Euro USD. And I pointed out that this was a confirmed low. So having it be a confirmed low, I said there has to be at least another low. From here I said there's a possibility it could rally back to previous support, which was new resistance up at 1080. It only had 10.5 in it. So here was your second low. I have a tutorial on this third drive that's a little different twist, because this is a variation of a third drive with a throwover. So I'm going to do a little tutorial, so if you're trading these three drive formations, you know what to do when wedge lines are, this is called a throw over or throw under the wedge line. So we had the second drive, we had a divergence, and here was your third drive on this candle right here. So was that a buy signal? It could have been, because you had a little reversal candle, not much. But if you were patient and waited for it, or even went for it here, this is how you treat the throwovers. So you let the throwover go. You have your line drawn. Next time within the third drive formation, you can go with it. And if you miss this first candle during the US session, we had a pullback in the euro. There was a big red candle before it reversed, and look at where it held. So you had a couple of opportunities on throw unders or throw overs. You wait till the market's back inside the formation. These do happen. They're usually capitulation type moves, people trading the wedge line, taking out the wedge line, you don't know, could have kept going. But once back in the formation, it became a failed breakdown. If you missed the first candle, you had opportunities to buy it against the wedge line. So we know this line is significant because once it broke down underneath it and got back above it, when they tried to take it down, all they could do was tag it again. Give me a Y if you're with me. I also gave these levels based upon what I saw in the daily. I drew this downtrend line that had been taken out. I said there was confluence at 940, 940-ish, 950. So the actual low of the move on the throw under was 956, close enough for government work. So what do we do from here? As I said, I think that the dollar correction, dollar weakness will continue, possibly at least into next week. I believe when you look at this daily, it's a nice reversal candle. We have them quite close higher on the day, but I would say for now, the only thing that is restraining it here is the 21 on the 4-hour, and then we can make a move towards 111.20, and then possibly some type of fib retracement of this recent decline is initially what I'll be looking for. And you can't rule out one more touch up here towards 115. That would happen if the dollar index took out that recent low. But like I said on the Dixie, we're going to trade it one step at a time. You're looking to buy pullbacks at 970 and initially looking for some retrace moves. So from this recent high, which we caught at the third drive formation, to today's low, looks like 50% right around this 1170 area. 61.8 is going to be right here, 112.15. So initially, we're just looking for this type of retrace. It has held the uptrend as well, right? Held the uptrend, held the almost a retest of the uptrend and the retest of the broken downtrend. So I think this is a pretty significant day in the euro, and I think that we could expect at least a correction of this pullback. And you can't rule out a wedge that's beginning to develop that could take us back up here towards 115, 115.50. So I'm open to that, but I'm going to trade this thing a few days at a time. Initial targets are going to be, initially we have this 1120 area, and then here's 1120. So this is a congestion area. Pullback should be well supported on pullbacks to 980. 980 should hold. We probably shouldn't even get this deep on this line, but if you have pullbacks towards this previous low right here, this is 110 and this is 109.90, so back towards 110 in that general area, I'd be looking for pullbacks. It may not pull back. That's why I always recommend having a piece. I was talking to people during this, and the candle was pulling back to the line, and I said, well, we could still go to 109.40. That's possible. That was this line here, 109.36, 109.40. But we're pulling back to the 3-drive line. Why not have a piece on here and welcome it going to 940 to add on with reduced leverage to build a position? That way you don't have to be perfect. You had your toe in the water, you're participating in the move, and you weren't waiting to be perfect at 930, 940. You were welcoming that to put on another small piece. So really one of my philosophies, guys, and you know, there are times, and you guys have seen it, that my numbers work and I hit things on the button. But you know, realistically, that's the exception, not the rule. Although sometimes you're in the zone and it keeps repeating over and over again that you're you're spot on within 1 hour of a candle. But take the pressure off yourself in your trading and enter with pieces rather than being all in, and exit with pieces. That way you're taking some of the psychological pressure off you that you have to be perfect and be there and be right within one candle. Because let me ask you this, if we're looking for 300 pip moves, if you can't be wrong for a day or wrong for a candle, how can you be right for 3? You can't be wrong for a day, how can you be right for a week? So again, you know, I talk about reducing leverage and using wider stops so you don't get picked off, giving your trades room to breathe, having tolerance so that you're not just right the market, wrong the trade by having your stops too tight, being picked off, and then the move happens without you. Give me a why if you understand that philosophy. So do yourself a favor and take the pressure off your entries and exits by using partial orders on entries and exits. My main point. Everyone with me on the euro? To me, I'd say high probability that we're going to rally back towards 11.20. Looking to buy breaks, we should hold around the 110 level, 109.80. On pullbacks, I think there's going to be more left. I think we could go to 111.40. I have confluence. There's another moving average up around 111.10, 111.20. And we're talking about initially a retrace off this level that could be 61.8, maybe as high as 12.80 is where a parabolic will come in. We're at 61.8 levels, around that 112 level, 112.15, and then eventually we can't rule out another test of this daily wedge line up here, which is going to come in closer up towards 115, which would imply we are going to get a new low in the Dixie before it turns into dollar. Everyone with me on euro? So I've never said buy the pound. We had lots of shorts going all the way back here in the pound. Okay, all the way down. Pound still not diverging, unlike the euro, which is diverging. And why didn't I want to say buy the pound? Okay, I was looking to buy the euro, even though I was short. And we were short the pound from well over the 148, 149 level. We caught a lot of nice action to the downside. It's still not doing anything right. But my tell was what? People have been following my work. What do I use? What pairing do I use for trade selection in euro and pound? That's right, it's a euro pound. And in the last week or so, I've been talking about in here that I didn't think we were done. I said we could have a third drive formation. Here's 1, here's 2, here's 3. So we're starting to get there. You're getting it on the daily, starting to diverge, reaching head and shoulders, bottom formation targets off this formation that I called down here. So now we're starting to get long in the tooth. And euro pound could be setting up some type of high. As you can see, here's 1, here's 2. I should probably adjust this line, but we could go as high as 80, 80.5, and as you can see, we have lower highs on the RSI on the daily, right? Here's drive 1's RSI. Drive 1's RSI. Drive 1 RSI, drive 2, diverge, and drive 3, we're still diverging in under 70. So kind of getting late in the game. We might spike up here, but we've reached head and shoulders targets based upon this formation, 4.25, with the low being 69. So that was 500 points from 440, gives you 940. There's the target. We talked about it way down here, caught this piece, and I was basically out of this trade in the 77 range. So last few hundred pips went without me, but it did tell me that I should still prefer buying the dips in euro than pound until euro pound peaks out. Give me a Y if you're with me. That was my market tell that the euro was your preferred long on breaks or looking for reversals, and that the pound remained your preferred short when the dollar was weak and the pound was bouncing. So even if you don't trade euro pound, you gotta pay attention to it so that when it's rising, you know what your preferred longs and shorts are. When it's rising, your preferred longs are euro, your preferred shorts are cable, vice versa when it's declining. Give me a Y if you're with me. So I also gave you a monthly look in the euro a week or so ago and said I thought we were going to attack these lows. We're not that far away from it. The low is 135. I think eventually we go there. 135, 133 are some targets. So it looked unrealistic when we were talking about shorting the pound up here several weeks and months ago, and continued to go with this. And this whole thing was more of a time correction than a price correction, that the monthly chart in euro and cable looked completely different. And we had confirmed lows on the monthly, which implied what? Yes, another low. So you compare that monthly with the euro monthly, and they look like they're from a different universe. See that? So the pound's threatening these lows, the euro isn't, right? So I even heard that a lot of the banks are throwing in the towel looking for parity or lower. So maybe that happens now. But again, look at these two charts. Pound, big break, new lows, taking out the 02 lows, 08 lows of the last financial crisis. Euro almost looks like it's just corrective, at least for now. So I talked about 120, 123 as being a possible scenario for the euro. We'll see. I know a lot of people, the big dollar bears, are looking for over 150. But that's a long-term narrative. It's going to be a long and winding road. But we think we have at least a correction coming from this recent range. Give me a Y if you're with me. We move over to the yen. We're beginning to diverge. So here we are at the previous low. I thought there might be a chance of holding 112, which it did. But then when I was with you Monday, I said sell rallies to 1350, 1360. It only got up to 1338 when we were talking, and a big break to the downside. Now I can't recommend shorting it. Of course, the longer term targets, here's a daily. We're getting some divergence. Once we take out this low, it should take out this low. But there still is a chance when you have such a major level like you do in the yen, that you had at 116, that perhaps we get an irregular ABC, which means this was A, and we haven't quite taken out the low, the panic move in the S&Ps. This is 1103 low, and this is 1097. We came close, probably going to take it out into early next week. And then you could have an irregular A. The irregular part means it takes out the A low, we go down for a B, and then we get some type of fib extension of this bounce that could possibly even take us back towards these highs, 115.5, and the breakdown at 116. So missed the entry by about 10 pips on the short at 1360. We only got to here. 1360, we only got to here. Called this pullback to 12, and now that we're at the lows, I would be pressing the short side again, thinking that perhaps into next week, the S&Ps and the dollar pull back lower, and then we get some type of reaction. Give me a Y if you're with me. Okay, so the crosses all made new lows. We did pretty well. I was looking for 25, and look at that. We got 25 and then even extended it. Never said buy it. There was no divergence. I still say it's on my watch list, but I can't get short Euro Yen here. That perhaps we do get a rally back towards 24 to 25. And I said look for a pullback in Aussie Yen. It was the only cross not making new lows. So since we talked, Euro Yen made a new low, Guppy has made a new low, Aussie Yen has not. So again, the preferred long is still the Aussie Yen. I think you could, I was talking about a pullback towards the 79 level. Of all of them, I like the Aussie Yen for a push. Think that we could head back up once we clear this 82 level. That 85 to 86 is viable. So we want to always go with a relative strength leader, and you're not a relative strength leader when you're making new lows, but you are when you're putting in higher lows, which is what's happening here. This looks more corrective to me. So I think that this may have been A with some type of B wave zigzag correction here. I can claim to be a master Elliotician, but my preference is to be looking for long positions here between here and 79, and then perhaps we could have a big rally in the Aussie Yen. Perhaps it happens around the turn of the yen. Give me a Y if you're with me on the crosses. So Canada did rally for Monday like I said it would. Here we were on Monday, and I said I think the crude is going to come off. That should be positive for Canada. If I'm right and crude still isn't done, my big picture was, besides buying it here, it's a pretty negative 4-hour candle, so maybe crude has bottomed and we're just going to wash out. But this was a nice call for a day trade, probably a negative looking day. Maybe they need to clear out stops here, but I still wanted to look for shorts back up here, at least at the 50% level. We got to the 38. Still was looking for a chance to do it between 141 and 142. But of course, the fate of Canada is based upon the crude oil. And if the crude is done, then Canada's done, and we're going to most likely wash out one more time towards 134. But right now, that still could be an ascending triangle here. So I'm either neutral or looking to be long Canada on breaks until we get to the fib levels that I've been talking about for weeks. That this was A and this is some type of B wave setting up here, and we hold 136.80 and still trade up towards this 140.55 level and possibly as high as 41.60. We'll need about another $3 break in crude oil for that to happen. Euro Aussie with recovery in Euro, and it looks like we're setting up some type of head and shoulders formation here. This one I was just a little bit early. I like shorts at 58, stops at 59. We have this spike here. Looks like 2 drives. It's so deep that I would no longer look for 3 drives. To me, it looks like you have the beginnings of a head and shoulders stop. I'm pretty bearish this pair. Here's your neckline. Right here. So we traded under it. We're back above it. But we could get a pretty good rally, and Euro Aussie could take us back. The left shoulder is all the way up here at 160. So I would favor buying breaks in this. We're starting to diverge here. Perhaps we get one more shot down with gold blowing off. But I am looking at this where I think we could end up getting some type of nice retracement off this decline. This was one heck of a decline, almost 1,000 pips. So why not 6 back towards the 158 level for a right shoulder? Therefore, I favor looking for spots to buy the Euro Aussie, and the big position short doesn't happen until we're up towards this 157, 158 level. Any questions on Euro Aussie? Any questions on anything I've covered here today? Okay, well, good hunting. My view is today was the day we were looking for that I talked about Monday. Knew Monday wasn't it because of the confirmed low. We've now had a divergence here. There's also, it's come out of a bit of a falling wedge, so 111 looks like a pretty conservative target, just anchoring it off this and this. We broke out of the wedge, looking to buy pullbacks if you're not long around the 110, 109.90 level, thinking that 111 initially is conservative targets with possibly up towards 112. And then when we get to the daily, we want to get too ahead of ourselves that we could even retrace all the way back towards 115, 115 and a half into the March time frame, maybe into the equinox. But one day at a time. In fact, write this down, put it near your desktop, laptop, whatever you use for your platform. Write this down. Do the right thing today, and tomorrow will take care of itself. And with that, good hunting, everybody. See you next Monday. Hope you're able to take advantage of the turn. Happened on a Wednesday instead of turnaround Tuesday, but we were right to be looking to short this rally in the Dixie and looking for, after being short from the 113.60 level in euro, to be bullish the dollar against the pound for quite some time. Looks like we hit it again on at least the beginning of a recovery phase in Euro USD.